I often get comments and emails asking if it's possible to use cash secure puts to generate income. Well, my answer to that question is so in this video, I'm going to share with you how I'm able to generate an income using cash secure puts. Now, I'm going to start off by talking a little bit about how the put options actually work, and then from there I'm going to share some real world examples where I've used cash secure puts to generate some income. Now, I think cash secure puts and covered calls are both great techniques, but in particular, using a cash secure put is a great way to start an option wheel strategy. Get my free course where I show how I generated income using covered calls. Just visit my website, coveredcallincomegeneration.com. So let's start by taking a look at how a put option works. A put option gives the owner, the person that holds the put option, it gives them the right to sell 100 shares. So as you can see from this diagram, a put option, that one option equals 100 shares. It controls 100 shares of an underlying stock. In this example, it's ABC Incorporated. Now the option, this put option has an expiration date, September 27th, 2021, and a strike price of $95. So let's take a look more in depth now. So this person that owns the put option, they have the right to sell the 100 shares. So they can exercise that option and sell 100 shares, and they're guaranteed to get $95 per share. Now the catch is they have to sell the shares before the option expires. So sometime between now when they hold it and the expiration date of September 27th, 2021, the owner of this option can sell those shares and acquire $95 per share as a part of that sale. So this option owner, they have the opportunity or the right to sell those shares, but they're under no obligation to do so. Next, let me take a minute and explain to you how I'm planning to use cash secure puts for generating an income. So for step number one, I'm going to sell a cash secure put, and I'll receive a cash payment as soon as this option contract gets filled. Step number two happens on the expiration day, and there's going to be two possible outcomes. The first outcome is where the option is exercised, in other words, the option finishes in the money, and in which case I get assigned the shares that I wanted. Or outcome number two, the option expires worthless, and that's because the option finishes out of the money. And in this case, I don't get the shares, but the money reserved as my collateral is returned back to me, so I can use it for another trade or to withdraw it or to do however I want with it. In step number three, the transaction's completed and I'm ready to move on to the next trade. Now, if I was assigned the shares, I may consider using those same shares to sell a covered call, or if the option contract expired worthless, that means my collateral was released back to me, so I may decide to sell another cash secure put. Next, let me share two real-world examples where I sell cash secure puts. So on July 9th, 2021, I placed an order to sell a cash secure put for Golden Ocean, stock symbol GOGL. So using the app on my smartphone, I press trade and then trade options. Based upon my research and analysis of the company and chart, I picked the August 20th expiration date with the $10 strike price, which at the time was paying 60 cents per share in premium. Next, I specified one option contract, and I specified 60 cents as the limit price or the premium that I wanted to be paid per share. Let's review the order before I submit it. I'm agreeing to buy 100 shares of symbol GOGL at $10 per share on or before August 20th. I'm reserving $1,000 in collateral in case this option contract gets exercised. It looks good, so I submit my order. It gets placed on the marketplace and made available for any interested buyers. This cash secure put was eventually purchased by a buyer. Let's take a look at the actual transaction confirmation in my account history. So here's the confirmation where I'm selling a cash secure put with a $10 strike price and an expiration date of August 20th, 2021. So I submitted this order on July 9th, and it was filled that trading day at 12:58 p.m. Pacific time. Now at the time of this transaction, it was paying 60 cents per share in premium. And when this option contract got filled, I received $60 as a premium, which was shown as a credit deposited immediately into my trading account when this order was filled. This next trade, I sold a cash secure put for Clean Energy Fuels, stock symbol CLNE. To start the transaction, I push trade and then trade options. I'm also going to use the August 20th expiration date for this option contract, as well as the $7 strike price, which at the time of this recording was paying 38 cents per share in premium. Next, I specified one option contract, and for the limit price, I picked 40 cents per share as the premium amount that I wanted. Let's review this order. So I'm agreeing to buy 100 shares of symbol CLNE at $7 per share on or before August 20th. I'm reserving $700 as collateral in case the shares get assigned to me. This order looks good, so I submit my order. The order gets received and placed in the open market, made available for any buyer that's interested in purchasing this option contract. Now let's take a look at my account history and the actual transaction where the cash secure put was sold to the buyer. So this is for symbol CLNE, where I sold a cash secure put with a $7 strike price and an expiration date of August 20th of 2021. Now I submitted this order on August 2nd, and it was filled during the market trading day at 12:53 p.m. Pacific time. Now at the time this option contract was sold, it was paying 40 cents per share in premium. And when this option contract got filled, I received $40 as a premium payment, which showed up as a credit deposited into my trading account. Next, let's take a look at the expiration date and find out what happened to both of these cash secure put option contracts that I sold. Here's a daily chart for symbol GOGL. Let's focus on the expiration date of August 20th, 2021. And just as a quick reminder, the strike price for this cash secure put option contract was $10. So on the expiration date, the share price for this stock closed at $10.04, which is just slightly above my strike price, but still this option finished out of the money. And as a result, this option contract expired worthless. We can verify the outcome of this transaction upon expiration by taking a look at my account history. Here you can see the transaction record for the cash secure put that I sold for symbol GOGL with a $10 strike price. The expiration date was August 20th, and you can see that the price at expiration date was $10.04, so it finished above my strike price, which means the option contract expired worthless. Now let's take a look at the daily chart for the shares of stock I sold with the other cash secure put. So that was symbol CLNE. Again, I'm going to focus on the August 20th, 2021 expiration date. And as a reminder, the strike price that I picked for this cash secure put was $7 per share. And as we look at the chart, we can see that the share price closed at $6.80, which is just below my strike price. So in other words, this option finished in the money. And as a result, I was able to exercise this option contract and have the shares assigned to me. Again, let's jump over to my account history and take a look at the transaction that occurred on the expiration date. Because the market price finished below my strike price, this option finished in the money and the shares were assigned to me. So let's take a look. So for stock symbol CLNE with a $7 strike price, I was assigned the shares. So the market price closed at $6.80 per share, and I was assigned the shares. In other words, I had to buy 100 shares, and I paid $700. So that's the $7 strike price times 100 shares. So even though the market price was $6.80, and I could have done a market buy and only paid $680 for those 100 shares, because I sold a cash secure put, I was obligated to purchase those shares at the strike price of $7 per share. So that's why I paid $700 for 100 shares. The transactions for these cash secure puts are completed. So what happens next? Let's take a look. So for the first example, I sold a cash secure put for symbol GOGL. And when this option contract got filled, I received $60 in premium. Now we jump forward to the expiration day and what happened? Well, the market price finished just above my strike price, so the option expired worthless. And as a result, the money reserved as my collateral was returned back to me so I could use that money for other transactions. So at the end of this transaction, I wasn't able to purchase the shares that I wanted, but I did collect $60 in premium, which is a 6% return based upon the amount that I had reserved for my collateral. Next, let's take a look at the transaction for my second cash secure put for stock symbol CLNE. So when I sold the cash secure put and the option contract got filled, I received $40 in premium. Now on the expiration day, we found out that the share price finished just below my strike price, so this option finished in the money, and as a result, I was able to exercise the contract and acquire the shares. So at the end of this transaction, I ended up owning the 100 shares of CLNE at the exact price that I wanted to pay, plus I still got to keep the $60 in premium that I received. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. You can download it at my website, simpleoptiontrading.com/one-button-stock-screener. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and/or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.